Well, good morning, everybody. Welcome to the Hawkeye session. Today is September 28th, and we're going to be going from 8 o'clock till 9:30. Right now, we have a U.S. yen in play. You can maybe pull your charts up in the meantime while we go through these disclaimers, and we'll get started here. And we'll get this out of the way. Okay, so the trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in the foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with the foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. Again, today is Monday, September 28th, and we're going to be going from 8 to 9:30. This is a live trading room. It is for educational purposes only. No financial advice or recommendations will be provided. Any trade taken during this session is not a recommendation or a suggestion that you should also do the same. Past performance is not indicative of future results. Do not trade money you cannot afford to lose. And before trading live, always operate with a written trade plan that identifies the rules for entries, exits, targets, and risk management. Now we have that out of the way. Let's go and switch over to the charts. I've got a US yen up and all drawn out already. This was at 7:30 this morning, East Coast time. And we have a stronger trend up here from the all the way back here, September 27th was actually, well, during the Sunday session, I guess you could say. And we had an anchor. Here's a hit. I was waiting for the third hit. Here's where we had the alert. I'm going to go ahead and move this over since we have the third hit now on this trend line. And part of the problem with this was when we had the alert, which is right here, and it was a descending wedge. I put my A here, put my C here, put my B. So there's the, and we had a little trend coming in. So I've got these purple lines are the, what I call the major trend. But we're going to have to break through this upper trend. If we can break through that, we have a target up here to the top. This is about 21 pips away. This was a blue fib line right here on the 15-minute chart. That's a relatively strong area, and I would expect to see this thing go on up to another area up here, which is going to be on our 15-minute chart. This is the 15-minute next line. We have some other 5-minute lines here. We're going to go ahead and tuck this in a little bit on a 5-minute chart and 1-minute chart to get as close of a precise entry as we can. And I said, here was the first entry. The problem with this entry right here was it was right going up, bounced off the trend line, came back down, retested the wedge, and now it looks like it's starting to break out. So that would be up to you if you wanted to try and take this. I'd like to see a close above this line, or we could just have a trap. You'll lose a few pips if you wait till the close, but like I said, the target right now, I'm looking to be all the way up here to the 105.558 level. So,
would you say, Al? Hey, good morning. But would you say that 5-minute candle close is a much more, I don't know, confirmed entry?
It's more confirmed, but the higher you can do a 5-minute close, you can do a 15-minute close, you can do an hour close if you want. The problem with that is that I mean, right now we're on a 8:04, so we just had the hour close about 4 minutes ago, which is actually a fairly strong determination that right here, this candle right here, you said this came up, it closed. This is the close. This little red candle was the open of the 1 hour candle. Now, if you wait till a 5-minute candle, basically, the higher the time frame you use for your reference, the bigger stop you're going to need to use. That's my feeling anyway about it. I said we did get a close above. This was at 8:04. This 5-minute candle right now just closed at 8:04. This red candle right now is the first candle of a 5-minute candle, and you can see where it came up, broke the trend line, broke this enter to close, but it didn't close above that. So right now it's retesting the trend line. If it can get enough of a push, we may be able to get a trade in here. But again, this would have been a little bit of an aggressive. If you closed on this purple trend line. This is a higher time frame trend line. This goes all the way back from Sunday, sometime in Sunday, where it made a pivot high and then it broke down all the way down to at 1 o'clock this morning. Then it started retracing back again. So this is an entry area. If I'll take it at will. And what I'm going to do is I'm going to take a buy stop above that wick, and that was to be at 105.41. 105.41 is the asking price, and the bid that's above. So 105.41 ish. And take my target, take my stop, put the trade in, and if it comes up and closes, if it comes up and takes the order, I'll be in the trade. My first target's gonna be right here, about halfway to the, and you can see the target over here. If you look on the 15-minute chart, your target's right at where this move came down first, starting at about 9:45 last night on Sunday night. So, and that's the way. And I would have a tight stop on the other side of this. I'd have my stop on the other side of this moving average, or into the wedge. And if this thing doesn't break to the upside, then we'll get out and try it again. I don't like trading a lot on Monday mornings, just because the markets are still trying to gear up for the week. We can get some good moves, but oftentimes you have to be careful with some of these breakouts like this, because they'll break out, get you in, and then they come back, stop you out, and you only get to go to the other position. What are your thoughts on this one, Matt?
Well, I am of the opinion that I'm going to wait for a 5-minute candle close.
Okay.
And I'm going to take it, but my take profit is going to be the stick. So I'm going to draw a stick within the wedge, and I'm going to use that as my take profit from the top of the wedge to the bottom. I won't go back as far as where our original hit is, back in September 28th, or the original hit at the initial hit on the trend line at the bottom there. But I'll take it to 9 o'clock. 8 o'clock. I'll take the 8 o'clock hit and I'll count that. So I'll have a stick at the break and I'll draw that. So my target on this one, if it breaks out of the top, then I'm looking for about 105.56.5.
Okay, you said you're going to take the stick from the range of the wedge. What range of the wedge are you looking at right here?
Right there, from that one all the way down to
here.
There. Yeah.
So basically what he's saying is he's taking the range of the wedge. Now you're using this purple line as the wedge. You're using the bigger wedge.
That's it. We drew the exact same wedge to the pip.
All right. And so we're going to take the stick, and where the breakout is,
we're going to use that stick as our target.
Use the stick as a target, which is right up here.
Yeah. It reaches it about 77% of the time if it's the break in the right direction, which is why I don't mind entering on a 5-minute candle close, because you've got that big of a move. Where is your stop going to be on a 5-minute candle close? It's actually not going to be at the bottom of the wedge. It's going to be at the other side of your top trend line.
Other side of the top trend line.
Yeah, just on the other side of it.
On this, just on this side right here.
Yeah, exactly.
So when you get so basically what you're saying is once you get your candle closed, you're going to use the trend line, the top of the wedge, as your stop.
As my manual stop loss. Yeah.
Okay. All right.
And then I'm going to add maybe 5 pips or spread into the wedge. And then we'll do her that way today.
Okay. Let's see if this thing we did get filled here.
Yep. So I'm not in there quite yet. Here is the painful part, because I've got to
you're
wait
not going
until the
to,
5-minute candle close.
because right now we're looking at this is a new 5-minute, the red candle. It was the close of the 5-minute candles. Now you're going
Yes,
to have
it
to wait for
was.
this. Now you're going to have to wait for this one to close.
Yep.
Okay. All
Yeah.
right. And I said, there's nothing wrong with either one of these ways. It's, I mean, a lot of people don't like using these 1-minute charts. They don't like waiting. They want to wait for the higher time frame close. The trade-off is that the higher the time frame to close, the more apt it is to run away from you. But also the same token is it may come back and pick you up to give you that other retrace back into the wedge to go up higher. So it's two different schools of thought. It really depends on a person's personality, trading personality, and there's nothing wrong with either way of doing it. We have several of our people that don't want.
Our target's at the same though, Al.
The target's the exact same spot.
We got the exact same target. So
And
whatever you did.
and my target was based right over here on the close, on the open, where this move came down. I figured that once this broke this trend line, with this trend line being broken, we have a hit. Now it's going to have to get through this little area right here. It's going to have to get through this area here. But this is the origin of the original of the move, where we had our lowest low. So this was the overnight range, and I just put my target up here. Now I may get out before then. I mean, I'm looking at this as a potential target right in this one here. So we have a target up here. This is the aggressive target. This is 21 pips away, pretty much. And we'll clone this, and we're going to bring the target. This is another target right here. I take it right to the top of the red lines because we have another little wick, so that gives a little bit of room to wick up and maybe retrace up in here. But this is the aggressive target. This is the more conservative target. This is our 7 pip target right in here. And we'll see what happens. We wait. Does anybody have any questions about this? And I gotta see a few people here that I need to bring on over. I see Eva popped in here this morning. And
morning, guys.
Good morning,
Hey.
Eva.
So if you do have any questions or anything that comes up, or you want to share a chart, or you want to just let us know, and we will you can actually put all your questions within the Q&A section so that we can see it effectively. Sometimes with Zoom you have too many screens open and they can get lost in the chat. So if you do have a question, feel free to put it in the Q&A and we will track that and answer it accordingly to the best of our ability. So here's that pull back into the wedge. Well, my wedge a little bit. Maybe my trend line's off a little bit. I didn't adjust it on the 1 minute.
Well, this was the one here. What I did was, this was the original, where this was the original hit with the wedge. Here was the wedge alert. I did move this over because we did have a hit of the trend line and it rejected it. So this was actually, I'm moving this over because the head of my arrow here on this trend line right now is the head of where the third hit is.
Oh, I get you. Okay. Yeah, that makes sense.
That's the only reason why I did that, just to help to validate the trend line. Now I know where my third hit of this trend line was.
Yeah.
With this one right here, we had the third hit right here at the D, and we need to change the template on this. There we go. And then there is should be a little arrow right here at the D. Oh, I need to move it. Here's the anchor, here's the hit, and here's the third hit right. That validates this trend line. This was the beginning of the wedge on that candle. And right now it came up. We never did get the 5-minute close outside the wedge. No, I'm in it already on this one. Let's see, I think we got it. Did we get the 1 minute close? We did get the 1 minute close. We didn't get it. We did not get the, well, we got the close of the wedge. We didn't get the close of the reference line, which I used, which was.
What's that, 2, 3?
This was the basically close. This was of the, actually we did get the close. See, this was my reference for the entry. I did just put a buy stop in there and did take the stop. It did fill it. I was still looking at a close, a 1 minute close above the trend line at this point.
Okay.
And let's see if I got that over here. Yeah, we did.
So there's another potential entry for myself. Now, on the 1 minute, you can draw a trend line from the bottom of those wicks and whatnot. So you'll have like a very strong trend line at the bottom side.
I think if you're talking, I believe you're talking about
Yeah.
these wicks over here, pretty much.
Yeah, exactly. Right there, Al.
Yeah.
So basically, you got a really nice bottom trend line ascending up. If price comes down and tags that new trend line, that 1 minute trend line, that will potentially be an entry for myself as an early entry and not a 5 minute candle close, because I like the way that it's respecting that trend line at the bottom.
Yeah, would you wait for a 5 minute candle close off that trend line?
No,
if it
I
just
wouldn't.
Bounces off the trend line, you'll just take it then.
I will take that, because that will be my that would be the most aggressive entry that I'm doing at this point, would be that bounce off a trend line inside of a wedge.
Sounds like you've been doing some back testing this weekend.
I have been doing a lot of back testing. Why? Because I'm officially on parental leave, which means that I can fine tune and put the amount of hours to really push my trading to the next level, and coincidentally will be able to the potential really help people level up their trading. I'm gonna see some special things, but I just like the way that I found that the 1 minute entry, great. You're getting a lot of really good tight entries, but with the 5 minute candle close, you're going to avoid these pullbacks, at least in what I've seen. So we'll see what goes on. If the target's big enough, like the target that we have on our screen, I'm gonna be a lot more particular about what trades I take and what trades I don't take. I'm not gonna be trading everything that comes out of the chute. Just want the highest probability ones, and that's what I'm trying to determine by going back and revisiting some of them. So that's actually a pretty nice break of my. So we'll see what happens here. Oh, your scale's at 2. No wonder it's playing with my eyes. I usually keep my scale at 5, so that when I switch from the 5 minute chart to the 1 minute chart, I can kind of.
My scales. What do you mean? My scale's at 2.
Oh, on the right. Your scale's at 2 pips in between the lines.
Oh, between the horizontal.
Yeah,
lines,
exactly. Right? Yeah. Yeah, it's just a personal preference. I just shrink it down to make it 5 pips in between each line. That way I don't get lost going from one time frame to another. All right, so we might come down and tag that trend line. You got nice bounce on the 1 minute 62, which I really like. Let's see what happens. There's going to be no more guessing. There's going to be no more kind of assumptions about where it could potentially break from me. I think I got to a point where ego was getting in the way, and I was trying to predict where it was because it made me feel better. I'm just going to wait for it to break at the 5 minute. and remove all of that confirmation bias. But yeah, the parental leave has allowed me to really focus. So I'll be off for the next 4 months, and I'll be able to probably achieve some pretty special goals in my trading. So
And we do have some new products coming out with Auvoria Prime. I
yes,
think they're going to be launching those. I understand what October 17th is the official launch or the projected launch date.
yeah. Myself, I've been we've been testing different of their softwares and different other products. Myself, I've been using Gearbox. I can't talk about my results. All I have to say is I'm impressed. That's all. Been testing it for the last 2-3 months, so I'm a little bit biased to it, but I think we're in the right spot at the right time, and we just need to dial in. And I think that with the wedges, it really complements the more automated trading systems that are available. It lets you have your fingers wet in some pretty cool trading markets where a lot of people can't or don't usually get the chance to participate. A lot of people don't play in Forex because they say it's just luck or it's gambling. Here we're getting a break. Still got 2 minutes till a 5-minute candle close.
Yeah, I'll just put this on the 5-minute chart so we can watch this as we progress forward on this.
Yeah. I do know that there are people that will take it on the 15-minute candle close. Myself, I don't have that kind of appetite because I need a higher risk to reward ratio than having to put a 10 or 15 pip stop on the other side of a wedge line. That's just,
Are you still using the same 7 pips stop with your 5-minute close?
Yeah, because I'm just putting it about 2 pips. I'm basically putting it spread underneath the trend line. So if it does come down, that it has a little bit of wiggle room, but that's a manual stop. But the hard stop, like the holy crap stop, like if all things fall apart, because of the structure of this wedge, I'm gonna put it at the bottom of that wedge. That's gonna be.
We're gonna put it at the bottom of this purple line. Right
Yeah,
here.
exactly. That'll be like at the bottom of your wedge here that you see. That would be.
Now, are you just looking for a close above this purple trend line? You're looking for a close above some other area over here?
No, just above the trend line, Al.
Okay, all right. So if we get a close above the trend line, let's see if we can. We'll be roughly looking at a.
I didn't adjust mine, so right now it's officially not closing on the other side of the trend line yet. It needs to pop up. There you go. All right.
I'm just seeing where the. I'll wait and see where it closes, and then see what our stop would be.
Yeah. So let's see. We got 3 seconds, 2 seconds, 1.
Let's slow this over here to.
And that's that next candle. So we're gonna try that.
So you're in the trade.
I am in the trade, Al.
Okay. So I'm gonna put this as your. And we're gonna take this as your visual stop.
Yeah.
And so I'm gonna put this as a stop zone here, right? And so I'm gonna put this right on the trend line, right below the candle that closed. I'm just moving this right down there as the stop. And so that price is at 105.36.7, and the entry at this particular on this candle was minus your spread, so you're going to get a little bit. So in fact, you were going long, so you're going to be your entry was probably up 2 pips, so 41.
My entry
to 43.
was
43.
41.5.
41.5. Okay, you got filled at 41.5.
Yeah.
Move this at 41.5, and so 41.5 to 36.7. So there again, it's about a 5 pip stop right now to the bottom of the other side of the trend line.
Yeah. So this will be
Okay,
my
so your stop is still in about the same area that I would be looking.
yeah,
I do like the I would probably want to keep mine a little bit below this
that trend line
62.
at the bottom,
Well, I'm
right?
looking at the 62, the 5 minute 62.
Oh,
I like
five
to
minute
keep it
62 is great.
is
Five
right
minute
there.
62 is great. Yes, absolutely.
So if you do a 7 pip stop on this, you'd be just right about in here, which would
Almost
give
at the
you
same spot.
a stop at 6.6 pip stop. If you, well, that's pretty much where I could end up here. Actually, I could end right about just a little bit. My fill was right at 42, so we're within half a pip of each other.
Yeah, not too bad. Not too bad. So let's see what happens. I'm gonna adjust my trend line because I don't like it right now. It's not looking that great. I cleaned up my charts, by the way, Al. I really cleaned them up. I got rid of basically almost all the indicators that I had on my charts. I'm just going to be using the RSIs, the multiple RSIs, and the whole moving average.
Okay.
And I'm actually using a free version of the trading view so that we can kind of emulate what we're doing for people that don't have necessarily the funds to afford the trading view license. But there's a big thing happening in the next 2 months with TradingView. It is on Black Friday. They generally will give a discount anywhere from 50 to 70% off the price of their annual subscription. So that could work very well.
Yeah, that's a huge discount.
Absolutely. Now we're taking a little bit of heat and it's not breaking out. So you got your 5 minute 13 moving average that I bounced off of. I'm not liking this, Al. It's just taking its sweet time and creating another wedge. This one's a descending wedge.
Well, it just again, this is goes back to the Monday morning trading that I tend to always
Avoid
be
like a
very
plague.
cautious about because of the you'll get the breaks, but yet I mean a lot of times these end up being traps. Uh, I took it basically showing the methodology that we use.
Yeah.
And no, I think the thing is that we have to make a choice, or everybody has to make their own choice of, do you want to just take every trade that has an alert that has the methodology, or do you want to find some way to qualify the trade? And, I'm not sure. I've got some methods that I use to qualify, which we've gone over periodically. And I mean, I like seeing the moving averages on all. Well, when I like seeing the spread of 3 or more on like the RCS tool. So right now we have a spread of 3 with the US being stronger by 3 on the Japan. That's given us a reason to go long. We don't have quite the same spread on that, but as time goes, as these consolidate, this keeps changing. But I'd like seeing at least a 3 on the 15. I'd like to see a 3 all the way, 3 or more all the way across the board. I like seeing all the moving averages being in the correct direction on all 3 charts. And right now we have, at the time where we had the break, we had all the moving averages on the 1 minute, the 5 minute were all good. And the problem here we have on the 15, we have the 62 on the 15 being, it was inside the wedge. It did get a close above that when we did take the trade, but we also have the fact that we don't have all 3 of these in the correct direction. They should be green, yellow, orange, and right now we have an orange. With the green and the yellow are in the right direction, but the green and the yellow, the 5 and the 13, should be above the 62. And that makes this somewhat of a less less enticing trade because of that.
Yeah, kind of a lower probability, right, Al?
Right,
It's
and
not.
we had the break of the wedge, but we had the break, it didn't close. We had the 15-minute, we had the break, it didn't close. So right now it's basing. I mean, I do think that if it does break, I think it's going to go on up to this area. But like I said, right now we have all this area right where we have this candle in the 15-minute. These are all wicks in here. These are all sellers. These are where the sellers came in to drive this thing down. So all we're doing is we're running into a bunch of sellers into this position. And that's what we're kind of fighting right now.
Let's see.
I said this could work out to be a very nice trade, but there are some qualifications.
I'm just on the 30-minute chart playing around while we wait for this turtle to do what it's supposed to do or do whatever it's going to do.
See, now we are getting the flip. We did get the close below the 62 on the 1 minute. We have the green flipped over the yellow. And in this case, this is about the time where I'm going to be looking to get out of this trade.
Yep. And I am not liking that. So I'm going to exit. I'll take that exit.
Now I'm going to let this go for right now. Just so we can, as we watch it, this is again everything you see on this trading view chart. They're always a demo account, and so we'll just let this play out and see how this works out. This was a little bit pullback. It didn't close below this trend line. It is consolidating here. But I like seeing I especially like seeing the 1 minute being in the right direction. If the 1 minute is in the right direction, it will pull the others up. If it's in the wrong direction, the others may keep it from going too low if they're in the right direction.
Absolutely.
And I said the key to trading is keep your losses small. That's one reason why we try and keep it so we can use a 5 minute or a 5 to 7 pip stop. But right now, these are not in the right direction. Now, if the green on this one can come below the yellow on the 15-minute, now they'll be in the right direction. If we get it closed below this purple line here and get the green and the yellow to close below, they'll be in the right direction. But right now, they're not in sync with each other. And your best trades are going to be if they're all in sync and you get the strong confirmations down below, you get the pullback, as opposed to try and get the breakout. Breakouts are tough.
They are.
And a lot of these wedge alerts are all basically based on looking for a breakout, but the breakouts have to be in the right order. There we had the close of this upper move. It's again, it's still inside the main, our main purple. These were the higher time frames. This was actually based. I did this off the alert, and we no sooner got the alert and it broke right up to the upside. But again, it hit right up into that area.
Mm-hmm.
Now, a lot of times, what you'll see me do. Let me just redraw this whole thing. I'll turn this off.
You got a nice W there on the 15-minute check.
We have a nice little W. Yep. But what we got the alert at 7:30, And that's going to be right about here. That's 7:30. It was a descending wedge. So again, I'm looking to see where the daily range was. This is Monday morning. This was Sunday. That's 25th. This is today's the 28th, 27th. So this was Sunday. Yeah, this is Sunday. This is Friday. And so this was the high for the over the night. This is the overnight high, overnight low. And we can start taking this as a descending. We can just start from the high, start to go to the low, go to the next pivot high, go to the next pivot low. And there's our wedge from the overnight session. We had the alert, and you can see where you can have the anchor. Here's a hit. You could probably tuck this one in. If you tuck it in all the way down here, you've got this little bit of a wick here, which is what we've acknowledged before. And this is where our target was. And here's the bottom of the wedge. This would be the higher time frame. I'll make this one orange because that's usually what we'd do with the initial draw off the 15-minute chart. And now it's a question of whether or not this thing's going to materialize. But I said, here's the wick that we're having to deal with. And I said, I want to see a close above this move down. Here's the wick is where all the sellers were that drove that down. So this, I'm going to call this our supply zone. And so we did have the breach here. This candle came up, and we had the trend. This is where the other trend line was, off of this wick to this wick, where we had that higher time frame trend line. But also, here's where the trap is. Here's where all the sellers are. Now it's still playing. I mean, right now it's still playing out. Not too bad, but it's again, this is off the 15-minute. Let's see how it works if we get a 15-minute close. This candle has 6 more minutes before this 15-minute candle is going to close, which means the 5-minute just closed. And this 5-minute candle closed way down here. You can see it still respected the purple 62. Look at our moving averages on 15. We did get the close above the 62, the 62 on the 15. It just said they're not all in the right sequence.
So even though I pulled myself out of that trade, guys, just note that I only lost 3 pips, right? It wasn't, I just call it slush, right?
This could give you another opportunity to get in again if you choose to.
Yes, it could. It could.
But what you did, you saved yourself if anything moved to the continued on to the downside. So you gave up 3 pips, but it also gave you the opportunity to say, well,
get a better entry, right? Because
maybe get a better entry.
This is pointing down, right? So you got this thing's pointing down. I'm gonna stick to my guns, and in the next 40 seconds or 24 seconds, we get a nice candle. I did forget one rule, which would have saved me that stop out. 2 pips. The candle's got to be 2 pips outside. My brain was a little bit foggy, so it needs to close
outside the entry
2 pips outside.
Outside the entry zone.
Yeah, across the wedge. So we're in. I'm gonna do that again, and we're gonna swing the bat. Because if you get one stop out with your rules, you can't not take the second stop out. You got to follow your rules, right? You got to get rid of the emotion of, oh, well, I just lost a trade. I'm like, well, it just didn't work out. You did everything according to your trading plan. We haven't talked about trading plan in a long time, have we? We mentioned it, but haven't had a lot of focus on it.
Well, we've pretty much been trading the trading plan.
Yeah, I know for sure.
But everybody's trading plan is going to be a little bit different.
Absolutely. Their guidelines for entry. So I still like my target, guys. I still like the target. That did not change. We are making a higher high now, which is really good.
Let's see, right now we've chewed up all these sellers that were in this range right here. So they're all gone. When this candle wicked up past it, that means all the sellers, there's no more sellers in here. Now it maybe moved up above, but all the ones that are right in that range are now done. So now we have pretty much clear sailing up until we get to this range right here. So this would be where the next line of sellers are going to be off of this wick.
And I think we're out of there by then, right, Al?
And we can be, let's see, this will be 6 pip. This will get a
Where's
6
our
pip
target?
target. Well, 6.6. So we might get the 6 pip target right in here. And then the next,
okay.
Then the next area, we have this nice big long extended range candle here. So once we can get through this point, the next area target is going to be up in this one.
That's going to be the 55, 105, 55 or whatever.
105, 58.
Yeah. Oh, I had 50. I don't know. 56. Yeah. That's what my official one was. Look at the bounce on the 13. That's pretty impressive. And then you got the all the moving averages are going to cross there. Looks like they might cross, and then you got that means impulsivity could have potentially shifted. So let's see what happens. So right now, if I close my trade, I would be break even. Good morning, Daniel. Pedro. I drew the wedge as you drew it, but my challenge right now, did you draw it on what time frame? Did you draw it on the 15? Because your A and B are really close together. And so your C and D are, oh yeah, you're drawing it on the 5 minute because you got a 7:55. So let me see if I can recreate this. And your time frame, Pedro? What's your time frame? We got a question in the chat. He mentioned his wedge here. I'm just going to try to recreate it. I like to have a little bit more distance between my my points, Pedro. So, are you using TradingView? You can throw your okay. So in TradingView, the free TradingView, what you can do is there at the top right of your screen, you're going to see take a snapshot. There's a photo.
It's right here. There's a little camera.
Yeah, exactly. So you click on that, and then it's going to give you a link. So you can put that link. Don't put it in the Q&A, but put it inside the chat pane. And then if you only want to send it to us, you just click on all panelists, and then you can do that. And then we can click on your link. We cannot click on your link if you put it in the Q&A section, though. I've tried that. It doesn't work.
I just learned something.
Oh?
Well, I didn't realize. I asked him if he could put it in the Q&A.
Oh, no, it's all good. I remember one time I tried, and I'm like, yeah, I'm not typing that whole mess after the thing out in the TradingView. What do we got going on here, guys?
Well, we have a little bit of a rally, base rally on the 1 minute,
Yeah.
and everything else is just looking strong right now. All the RSIs are pointing up, and we do have a little bit of a hook up here at the 89 on the 15 and on the 1 minute.
Yeah, look at that moving average. Look, all moving averages are in the right direction here. Everything looking real nice, right, Al?
Well, not quite. The yellow one on the 15 still has to cross over the
Yeah, I meant the one. Sorry.
62. All these on the 5 and the 1 minute are all in the right direction.
Yeah, I like the distance between the 1 minute 62 and the 5. That's
So once we come on up into this is the next zone that it's got to get through. But by this time, we should be getting pretty close to getting our 7 pips.
yeah.
And look where our fib lines are. Let's see where they are. We've got
Yeah, see if we got some more potential targets here.
I like seeing when the fib lines are right at where right now we have a green one on the 2 minute. Next one's right up here. We have a red 2 minute line right here at the 105.51 area, and usually 45 to 55 is a zone where you can start seeing some profit taking or entries. So
let's see. If we were on the 15-minute chart, our entry would be
right here.
Right about.
We would just be getting it. We would just be getting in right here.
Yeah, we
right
would
about the time. Right about the time we're taking profits.
Yep. So I'm already in profit, including my my stop loss from earlier. But if we're entering on the 15-minute, we're only starting to get in the trade, and we're just starting to take profit or getting past spread, depending on how long your broker takes to execute your trade. Oh,
So
perfect. Here, Pedro, let's go see. All right, I'll pull this up on another screen, see what we got going on. Oh yeah, that's more of a channel, my friend. Hold on here. That's kind of more of a channel. So I like how you drew the solid yellow line. You could do a couple things, and it's totally up to you. If you want to make it a little bit easier on your eyes, you can use, instead of that, I actually don't put the see how we can put this together here. Yeah, because you see what I mean by a channel, because you've got, it's just low. Sorry, I'm gonna compose my thoughts and come back to you in a minute. I'm not just gonna talk. That'll be better that way. Still early in the morning.
You see, right now we're looking at this thing still coming right up into this zone, which is, again, this is where on the 15-minute chart, this is where there was a little wick up here, and this we had some nice little pullback, and then this was there where the end of the pullback was, and when it came falling. And so right now we're looking at, while Matt's composing his thoughts, we've got, here's another wick. So here's a wick here, here's a wick here. We already broke through this one. Now it's coming up to retest this area.
Yeah, and you're saying we got some pressure. We usually
we got some pressure. We have a nice move down. It came back. Here's some sellers came in, took it down. More sellers came in, took it way down. So there's still this whole area right in here is where the sellers are still hanging out.
All right.
And like I said, he was saying earlier, we have a W. Here's one leg of the W. Here's the middle of the W. Here's the second leg, and now this one's coming right up to retest this area up in here. And oftentimes you'll see either you'll see it break through and reject, or you'll see it come up to the bottom and then reject. So it's got to get through this. This is a key area for it. It can't get through this until and retest this until it gets through here.
Let's check it out.
And this is where it's you just kind of go for your 7 pip profit, and you get in, you get out, and you're done. And this is turning into a nice little trade still. I did move my stop up a little bit to protect some of the. In fact, right now I can move it up to break even, so that it's a
Risk-free trade, pretty much.
risk-free trade, or you just take your profits. Usually, what I do is I just take my profits.
Yeah. I don't like letting it come back down and take me out at break even. I'll just take profits.
Yeah, if I expect it's going to come back down, I take the profits, come back in, maybe gives me the opportunity to re-enter. I like keeping, if you're going to be trailing this, I would prefer to just keep it below the yellow moving average.
Yeah.
And just be willing to take whatever that gives you. The 5-minute moving yellow 13 moving average is it's a pretty good one to use to track with. Because oftentimes if it does retest, it'll retest that one. The first retest oftentimes will be off of that. And see, we're on the 15-minute chart. So yeah, see right now it could very well come back and retest this trend line. We don't have all the moving averages on the 15 in the right order yet, but here you have where you could actually just track it with if this trade works out and keeps on going, the 62 you should be able to keep it below the 62 on the 5-minute chart until we get a little bit more distance. And once these things, the 5 and 13 start pulling away a little bit from each other, then you can kind of move it on up. But I'd like to get a few more candles between this yellow one. So I'm going to just keep it down a little bit lower, keep it down into the wedge. I'll just keep it down right here, right below this extended range blue candle right there. It went from 7 pip stop to, and right now it's just a little bit below 5. So I'm just still keeping my protection in there with the thoughts of the breaking through the upside to this other target up here. You can see how the 13 and the 62 on the 1-minute chart, how they're getting wider and wider and wider. Here's how it broken, just getting wider and wider. And that's another area that I like to usually use for a stop. Because this will probably turn over, pull back, which is just what it did over here. It pulled back, closed below, gave us the call. It came out. That's where we got out of the first trade, but it came right back in, regrouped, reconsolidated, and reconfigured. Again, took another break over the wedge, and now it's off and running.
Yeah, I'm going to be pretty rigid with my with this owl, so it might be a little bit different. That's just what I've seen when I did some back testing. So
yeah, well, it's just a matter of different personalities, different criterias, and there's nothing wrong with that. What's important is that you follow your plan. That's what's important. It may be different than mine. It may be mine may be different than yours or somebody else's, but find out which plan works for you, and then stick with that plan until proven otherwise. And then if it doesn't work, then you make adjustments to your plan.
Yeah. What about consistency, right?
Yeah, and we're just trying to give everybody ideas on what to use, how to write it into your plan, and show the different techniques, and then just find out which works for your personality.
Mm. right. So, Pedro, while we're waiting for this to play out, bottom trend line, super. Bottom trend line works out, makes sense. What's happening is I would be putting your A a little bit higher because you're going to go high, low, because right now your wedge, it's not, what's the proper word? It's more of a channel than a wedge. So if you took your A and put it, either tried to make the top flat before the wedge alert, or you took it to the higher high, where your red wedge is, and then connect it to the spot, then you would be in a pretty good position. If that makes sense. Let me get, I've got a really cool tool that I can draw on anything. So maybe, what is that called again? Ink to go. Ink to go. Here, Al, you still in this trade, Al? Or did you take your profits and bail?
Yeah, I took my profits and bailed. Do you want to share your screen?
Yeah, I was just doing Pedro's.
So people can see what you're doing.
Yeah. We'll do that. Hold on.
If Pedro's okay with everybody seeing the screens, we should probably ask him permission for that.
Yeah, it's probably a good idea. Well, it's just his wedge, so it's his trading view that he shared in the chat. So it's not his screen. Let me see. I'll just
go ahead and show it so that way everybody can kind of see what you're doing. I'll stop sharing.
Sounds like a plan.
I'll take it away.
I got too many screens open right now, so let's do share screen. Let's do that one. There we go. Perfect. So here, I'm going to draw it with the, I'm not going to do red. I don't like red, but yellow. Let's do it that way. Let's do white since it's black. Black background, black highlight. And then let's sharpen it up a little bit because it. Okay. So here was your A. Oh. Here was your A. Sharpen it. Okay. Let's delete that. Got it. All right. A. Let's try that again. Oh, it's been too long since I've used this. All right. One of our mentors used to use this all the time to show us stuff on the charts because you can write on anything on your screen. So it works really good. All right. Try it again. So here's the A. Here's the B. You put on the blue candle. Completely fine. And then we have here's kind of deceiving. And the reason we don't kind of draw the wedge in red is because we got red candles. So it's kind of hard on the eyes. It's hard to see where the wicks are. See right here? I'd have to go back to my own chart and find out where the actual wicks are. So give me a sec. This is not a wick. So the wick would actually be here. So you got a nice tag, and then you got a nice tag here, which is completely great. This is after the alert, right? This is where the alert comes. Myself, I'm going to want to try to keep it as like on the wick as possible so that I can get the most accurate touches. This A, I'm moving over here so that I would have something like, see if I can, I'm going to share my other screen. Actually, I'll just drag this over here. Oh, look at that. I made a nice mess. I don't even know where anything went now. Oh, it's my whiteboard. There we go. Sorry about fumbling around. And it disappeared. Let's go here. I'm going to get used to this again. It's been too long. So let's erase this for a sec. That's Apple, by the way. That is not Forex because I'm just using a free one. Just want to experience the free version again and just make it happen. So I had set up, where are you? Euro, it was USD JBY. I think that's the one that's going to work. All right, cool. So I just put forget this one. We're going to hide that. Some people know what that is. This is how I had drawn it. Al drew it almost the same way. One of the really important things to note here is how clean it's. I found that it's just a lot easier on the eyes when you have colors like this, so that it's not as I don't know, hard to follow. It doesn't burn your eyes, especially when you're looking at so many charts. So I didn't put it on the right, but I will use magenta because that's the color of this wedge, because I did it on the 5-minute chart, just so I can, here, maybe purple, whatever you want to call it. I don't know. I'm partially color deficient, so sometimes I don't get the right colors anyway, so that's magenta, whatever. All right, so this is how I would have it. See, this is more of a channel. You got, it's kind of like you took two trend lines and you just made here. If I wanted to see the width of this this whole move here, I would look for, and I'll make it thicker so we don't have, this is kind of a channel. So this is where price is going, or could potentially go. So if I wanted to know the width of a channel, this is how you would draw a channel. If I wanted to know this channel here on the 5-minute chart, oh, let's get rid of that. You could draw from here to there, and then you just bring this down here, and then you have that channel. So you see how kind of momentum shifted? You went from, sorry, the direction shifted, you went down, and now you're going up. Something a little bit more, not really advanced, but this is where you can really get some major use out of trend line. Now I'm making these really big so they don't cause any problems, but if you draw it like this, you've got another channel. So you got a channel, a channel, a channel. You see how this one's really big, this one's getting narrow, and this one's even narrower? There might be something there. It might be something of reference. But does that make sense, Pedro? That the wedge is a little bit too maybe narrow. I don't know what the proper English terminology is, but hey, that is looking really good, Al. The
original target just got hit.
Yep. Yeah, so that was the first target. Now we're getting a little bit of a pullback here. And look, we're at the top of the channel. So is it surprising that it bounced where it did? No. Now that I adjusted it a little bit on the 1 minute, Every time you go down in time frame, it's going to adjust a little bit because you got a little bit more precision. And these are kind of too big, but it doesn't have to be exact, but it just gives you an idea of what else there could be here. There's actually, we don't talk about, what time is it now? 9 o'clock? We only got half an hour left. So if you guys are okay with not taking a break today, because we're only going for a little bit, we can show why these channels are kind of important and why you might want to look at channels. Let me see here. We'll throw something in there. My screen is pretty messed up. All right. So if we wanted to put a little bit, add another layer to this, just to show you how advanced or how fun pitchforks can become without making, or how much fun wedges can become without making it overcomplicated. You can actually, there's a tool on TradingView called Pitchfork, and they're trend lines on steroids. And my magnet tool's on. So I'll take this off so you can see that what I'm doing. But what I'm basically doing is I'm connecting this point here, and I'm looking for some kind of confirmation here. I don't like this one. So maybe we'll let it breach a little bit and put it right here. So this will be all right. Anyway, enough with that. Let's watch the rest of the trade here. It's coming back down, so we'll see what happens. Al, you good to take it away?
Yeah.
For a little bit.
Oh, hang on. Let me start sharing again.
Ink to go was very painful. Yeah. Let me stop sharing. Oh, there you are, Pedro. Sorry, I couldn't see what you're doing.
Okay, you can see that right now this was the trade that we had the target up here in this supply zone. It came up, tagged the target, went up a little bit higher, and now it's starting to pull back, retesting the, right now it's retesting this green 5 exponential moving average. We probably are going to get a close below the yellow, and so we're starting to get the green and the yellow starting to cross. Here's our 1 minute 62. Which is oftentimes what you can use for a trend, as if you're trying to get more, if you're trying to hit this target, this other target up here, you're going to be getting some pullbacks, and that's something you just have to learn to live with. This is where we are right now. It took the first target, got the 7 pips out of that move, and pretty much now waiting for another alert. Or if you are still in this trade, just wait to see if you can get a few more pips out of this one.
Yeah, I'm still in this one for a little bit.
We are starting to get the yellow 13 and the orange 15 minutes 62 crossing. That's pretty significant. So this could just be a pullback. We have a nice little, on our RCS tool, we have a nice 4-point spread on the 15, 5 on the 5. And right now we have a strong pullback with the yen being a little stronger on the 1 minute, but that's just the pullback. As long as these can stay in the right direction on the pullback, once this thing flips and you get another flip of the moving averages in the right direction, you could probably try taking it to shoot for this next target. So right now this is a pullback, and we'll see if we get the cross of the 5 and the 13 up here on the 1 minute.
Yeah, that's the pullback I was looking at. Now, the longer you stay in the trade, the more pullbacks you're going to have to deal with.
Exactly.
Which is why Al loves getting out and not having to deal with these pullbacks. So let's see how far this pullback comes.
Right now, you're seeing where this is coming down. You can see where this 62 is almost the same spot as where the 5-minute 13 is.
Yeah.
Come back down. Here's a hook.
If you want the bigger runs, you're gonna have to swallow the
pullbacks.
pullbacks, and that's the way it works. There's no ifs, ands, or buts about it.
Right now, with that pullback, we still maintain the 5 spread, and right now we only have a 2 spread on the 5 minutes. So this is a pretty strong pullback. Again, this is right at 9 o'clock. We just had the 9 o'clock bar open. So this is a half hour before the U.S. Stock market opens up, and so we're getting a little bit, and we get a lot of movement right around the 9 o'clock area. We didn't get any new alerts coming in, but it's not unusual to get a correction during this period. You get a nice little run before 9 o'clock. 9 o'clock hits, you get a pullback. Then the U.S. market opens up in another 15, 20 minutes, 19 minutes, and then you get the opening reaction to the markets.
Yeah, let's check it out. Remember Al said about the 5-minute 13.
And you still have the 62 on the 5 minute way down here below the wedge. So if it could come back and retest the wedge, retest the 62, retest the 15 and the over here. And as soon as this yellow one crosses and closes above the orange 62, then all 3 of these timeframes have the moving averages in the correct direction, still have the strength. As long as the dollar stays as the strongest currency, which is the first currency of the pair, we want strength to the upside on this one. And right now we've got the flip of the yen. So right now the yen just got stronger to the dollar on this pullback. This is a substantial pullback. And this is why I like taking my profits when I get to that first target, because I don't like to have to, nothing I hate more than to know that I'm up 7 pips. I didn't take my profit, come back here, and now I got to deal with my spreads again. I've got to deal with my, and it just, and oftentimes I'd rather just take the profit. If it pulls back again,
potentially get a second entry.
Get a second entry. Worst case scenario is it keeps on going, and I took my profit.
Yeah, that would have been ideal in this case.
And I said the reason why I had problems with going any higher, I mean, I said we did have this other target up here, but I said as I showed you, that we needed to get through.
We got to bounce. We got to bounce exactly where you stated it was going to bounce, and
but we had these sellers. We had to get through this wick here, which is what we did off of this move. And then we slide on over here. We have another little. Here's an extended range candle coming down. The origin of that was right up in this area. And this red zone was drawn off of the 15-minute candle, the 15-minute chart. And you can see that this is where there was a wick here, strong move down, and we had to encompass the sellers in this wick, sellers in this wick. That's why I brought it into that area. If it can break through that, it's going on up to here. It's got to get through this area first. And once it breaks through this area, there's a little drop. There's basing in here. So
we got another alert.
Did we get another alert?
Yes, sir. Maybe we'd have time to set this one up and maybe
try to do that. Yeah. So this is a little basing area that we have right in here that's got to get through before it goes on up. Okay, so we have a U.S. CAD trade.
Yeah.
And it looks like a descending wedge on the U.S. CAD. So let's come over here to U.S. CAD. We'll see if we can get this thing set up before we should be able to get set up in 15 minutes.
Oh, for sure.
So I'm just going to clear this chart. Clear all the fib lines. Now I'm going to see where my fib lines are on the 15 minutes, see if there's anything close inside here. Right now we're between a green and a blue fib line. Those are 15-minute. So
Yeah,
right now the blue fib line is right down here. So this is the range we're at, and it's right in the middle of this 15-minute range. So we'll just keep that in mind. Turn them off again. And we have our wedge alert, which was at
Ooh, this is gonna break really quick. Al, we gotta be
9:15.
quick on that.
9:15, okay, and it was a descending wedge, so we've got a, yeah. Let's see here. Here's the break. Can we get this?
All right.
9:15. And oh boy, let's see here. Descending.
I am drawing it on the 15 this time because of the.
I'm going to start with my A up here. Come on down to the B. I'm going to draw it off this, tuck it in over here. Draw it down to the bottom. Here's my wedge. See how it looks on the 15-minute chart. About the same thing. Okay, so we have the wedge on that one. Now it did have it's getting the break of this. I don't want to be in too big of a hurry with this. There's my hit here. Tuck this in over here. Should have, I mean, basically, sometimes these things just seem to break, and they seem to be breaking faster and faster as when we get the alerts, it's already starting to break. And I don't particularly like that. But here's a small little trend right through in here. So let me just flatline that right across here. Change this here. Here's the top. Here's the bottom of the main wedge. Here's the alert. Now we did have a strong trend going up, and it's making another. See how our moving averages, our RCS is. We have strength on the dollar. Not a lot of variation here. Right now, they're both pretty much in the middle of the strength meter, so to speak. And I'd say right now we wait and see how this thing plays out here. We'll see if it gives us another little secondary wedge up in this area. Looks like it's already doing that. Have a little bit of a trend.
I'm going to step away for 30 seconds. I'll be right back.
Okay, all right.
Right before the end of the session.
Let's see right now. So here's the alert. Now I'm looking at this pivot right here. I would want to see a close below this pivot. And if we did that, then we could possibly do an early entry coming on down. But let's take a look at our moving averages. Right now, the moving averages are in alignment to the downside on the 1 minute chart. We have the white, yellow, green. Here on the 5 minute chart, let's put the moving averages up. We have them up, and we have right now we're having a hit off the purple. So these are not in the correct order. These are not in the correct order. Now, once the green crosses the yellow, the 15-minute will be in the correct order. And once all three of these correct, they'll be in the right order. Right now, I see no trade. We have to wait for everything to get set up. Right now, it's setting up, but it's not set up just yet. Our RSIs are in the middle of the pack. There's nothing to trade. No extra strength showing on the bottom here. So here's where you just have to be patient. I am looking at this strong blue candle, and I'm looking at the wicks below there on this 15-minute. I'll just make a note of that. Here's one of those areas where I wanted to see a, where's my close below the template here, enter on the close. Yeah, so this is the area that I would want to, if I were to take it short, I want to see it close below in this area. I'd like to see the moving averages be in the right direction over here. It's starting to get that way. We have the nice little hook on the 5 minute underneath the 62, and that's a good sign. And we're starting to get the crossover up here of the 5 and the 13. This is a strong move down. Actually, from here is a strong move up. It's making its own little wedge up here, but so I want to see it. I would want to see it close below here. That would be a more aggressive entry, and I'm not looking at doing that until I see all these other moving averages being in the right direction. So I'll just pass on this trade.
Yeah, I'm not touching this one. At least not right now. It would have to be much closer to the wedge break, and I would want a 5 minute candle close with at least 2 pips on the outside, and I would be looking more for something with the moving averages to cross exactly like Alice said.
You look over here, if you look at where the C is on this, if you come over here and get one of these little ray tools and mark it, and if you come on over, align it with the C, you see over here, you'll look at where these wicks are. So if I come up and I hit a wick, I come up, I had a little bit of a body right here by running some more wicks. I'm not seeing a target up until we get up to probably about this area would be the first target that I would see, because we had a nice move up on the 15 minute, came down, retested this. This was the origin. And then we had this nice big candle coming down. This is a key candle, and this would be the first. I would want to see at least a break above the close of this red candle into this zone above the wedge. So I would want to see a close above this zone in here. I'm going to draw this one out. And I'm doing it on the 15 minute because that is the higher time frame, and it gives you a little bit more validity. But I would want to see if this thing breaks to the upside, I want to see it close somewhere inside this this zone, enter on the close inside this zone. And the moving averages, now we are getting a close below the 62 on this one. We're still having some problems with in this area right in here on the 15 minute. Let's see if I take this off. Here's the wick on the 15 minute. You can see where if I draw that across, you'll see that here's the wick. Actually, we need to get this thing down a little bit lower. I would like to see it close inside this area.
So we got some dollar weakness going on for a little bit. It looks like a pullback right before the market's about to open, just like you're talking about, right, Al?
Yeah.
We've got 6 minutes before market opens. So not exiting where I had an opportunity to exit. I got some heat. I was up 4%, but I was sticking to the plan with the stick, and I still believe that the stick is valid. It's just that pullback was pretty significant.
So we have about 5 more minutes. Anybody have any more questions or comments before we go?
Is everything as clear as mud?
Pedro, you have a
Must be
question?
clear, they never ask anything.
Huh. All right, let's see.
If anybody has any questions, so you can just raise your hand and we'll turn your mic on so you can ask away.
Absolutely. Let's see who. Where's Beach Panda?
Beach Panda hasn't been in the room for some time now.
Well, actually, he was here
He
last
was
week.
there. Yeah, he was here Friday, wasn't he?
Yeah.
Yeah, I remember.
Was?
Yeah.
We're missing movement today.
Yeah. All righty. So 4 minutes until market opens. Oh yeah, Pedro. So he's got a great question that says, when could you explain the directions of the moving averages and when to take the trade in different times?
Sure.
It's
The
like an additional confirmation. Yes.
Yeah. Let me just let's see here. The moving averages are, we have 3 moving averages, and we have the orange one. We have 3 different time frames. On all 3 time frames, there's a 62 exponential moving average, and that's the orange one. Is the orange on a 15-minute chart. On a 5-minute, the exponential 62 is purple, and on the 1-minute, the exponential 62 is white. The others, green and yellow, are always going to be the 5 and the 13 reference to the time frame that's on. So the yellow and green doesn't change on different time frames. The only one is where I can look and see, oh, if I see an orange 62, I know I'm looking at a 15-minute chart. So having said that, I want to see the fast one being first, which is the 5. The yellow one is the second fastest, and then the 62 is going to be the slowest. You want to see them in the fast, medium, the slow, in the up direction, and then just reverse of that, it'd be the fast, medium, and slow going into the down position. And if you have all 3 of these moving averages in the right order, that gives you extra strength, extra confirmation that you're in the right trend. And you'll see the 1 minute is going to pull back and cross over more frequently than, because it's a faster time frame. But usually what happens is that if you're all in the right order and you get the crossover of the 1 minute to where it's not in the right order, all it's doing is having that's your retracement. As long as it can retrace without flipping the others, then when it comes back into the right order, now you've got the momentum of the strength and momentum of the lower time frames to help carry it through to the next trade and your next target.
That is as good as anyone else could explain it. That is perfect. That was a lot, though, but it's perfect.
But basically, you want all 3 in the fast, medium, and slow, all 3 in all 3 time frames going in the same direction. And then when you get the 1 minute pullback, which goes opposite the other two higher time frames, that signifies a pullback. And then once this one comes back in the same order that the other 2 are, now you've got the strength of. Now, as long as this thing is gone in the same direction, these aren't going to retrace. It's going to keep pulling them up. If it's going opposite, it's going to try and bring these back down. But as long as they can have enough strength to keep from reversing positions, then you know it's just a pullback as opposed to being a reversal.
And you'll see when you put that on your charts, the 5/13/62, it holds true for every time frame. But it helps a lot on the 1 minute and the 5 minute, the lower time frames. That's how you can get your tighter entries.
Yeah, like if we look like right now on our US yen trade, you can see where, I mean, these are starting, right now we have on the 15-minute chart, green's the slow, fast one, the yellow, and then the orange. So right now it's saying this has the momentum to go to the upside. They're in the right order. You've got the yellow crossing the green. So right now they're all 3 of these are in the right proper order. If I go to my 5-minute chart, and you can probably see that all 3 of these are now in the proper order. You have the green fast, and you can see like when the green one comes down and tags the 13 and then hooks back up and doesn't cross it, That's another signal to me that this is just a pullback. And right now it came down, it challenged these 13. Now it's hooked back up. Now there's hooking back up. They're all pointing in the right direction, but they're all in the right order too. Fast, medium, slow. Go back to now you go to the 1 minute chart. In the same situation. Right now we have fast, medium, slow. So these are in the right order to go long. These are in the right order to go long. This one's in the right order to go long. As this thing pulls back, as long as this 1 minute can stay in this same order, there's no reason to get out of the trade because and then as you see this white one and the yellow one start pulling away a little bit further and further away, that's just adding more fuel to the fire. So you're basically building that fire underneath to keep it moving to the upside. And that's the way it works. All right, this is 9:30. Session is over. Thank you for everybody for your attendance, and we'll be here again tomorrow at 8 o'clock. We'll go a little bit longer tomorrow, being Tuesday, and we'll see you then. Have a good day, everyone.
All right, take care, guys. Thank you so much for coming.